Hi everybody, welcome to the Parallel Systems broadcast. I'm your host Mike, and in today's show I'm going to be revealing the shocking details of this recent announcement by Jeremy Hunt in the UK. The UK are planning to deregulate banking once more. They are also planning to take people's pensions, deregulate that so that they can put those pensions into the most risky assets possible. This is going to have huge consequences for people. It's going to destroy people's pensions. Now, the only explanation I can come up with for all of this is they are trying to keep the system going that bit longer, and they're going to use whatever money they can, including your pension money. And I'm going to explain why in today's video. So this is an important one. But first and foremost, let's just have a quick overview of what they are planning to do. It says there's going to be more than 30 reforms that will cut the red tape and turbocharge growth. Remember, the UK is going into a Great Depression. There's going to be no growth. So this seems to me awfully optimistic that they're going to try and turbocharge growth by deregulating the banking system, when the reason we have no growth is because of the corrupt banking system. It's because of the deregulation. It's because of the hyper financialization of everything, and of course it's because of zero interest rates and quantitative easing. However, they believe the solution to that is going to be more deregulation. That's what they're going for. Now, of course, you've got to remember that much of the regulations that are currently in place were brought in post 2008 because it was too deregulated. We had a financial crisis. It nearly brought down the system. Some banks faced collapse, and the British public were on the hook for 137 billion. That's how much the government had to use to bail out the bank, and taxpayers lost at least 40 billion. However, I think the number was way higher. They said 40 billion. I think it's far, far higher than that. They're not telling the truth on that. It says here the government has already announced it will scrap a cap on bankers' bonuses. So the bankers, they're going to get paid as much as they want. There's no caps on the bankers. Of course, this is the disgusting corruption that lies at the heart of our world right now. The bankers are well and truly in charge of the politicians and not the other way around. It also says they're going to allow insurance companies to invest in long-term illiquid assets such as housing and wind farms to boost investment and help its levelling up agenda. Now, what this is the government trying to move capital around. This is not the free markets. This is the government trying to push capital where they want it to go. It also says there will be new rules around bundling investments together into tradable units, a process called securitization. So I can tell you exactly what this is going to look like. This is going to be just like in the build up to the GFC, the Great Financial Crisis, when you had all of this toxic derivative crap, all of these subprime mortgages, and they bundled them all together and made very opaque investments and then resold them on, saying that they were grade A top quality investments. That's exactly what the UK government is planning to do here. They're going to start to bundle together toxic dog shit, all these derivatives, and then they're going to resell them on. And they're going to sell them on where? Well, it's going to go to your pension funds. It's going to go to managed funds. That's what's going to happen. So this is something to be very, very afraid of. Now, Green Charity, the Finance Innovation Lab, said the government is taking major risks with the stability of the economy. They are weakening the essential protections that were put in place after the global financial crisis. And this is an incredibly dangerous move. They help keep the system stable and our money safe, but they're removing them. Why would they do that? Why would they be doing that when we just had a pensions crisis that exposed just how fragile the system is and just how dangerous some of these derivatives are? If you go down further, it says the government also re-announced more freedom for the pensions and insurance industry to invest in longer term illiquid assets. Illiquid assets. That means things that you cannot sell when you want to. You can only sell when there is liquidity in the market. Illiquid assets are difficult to sell. Now, that doesn't strike me as a good move, does it? Why would you want to put your money into illiquid assets? What if we have a huge crash in the markets and you want to get out of some of those investments? What if you need to? What if your pension fund needs to sell something so that it can meet margin calls, for example? Illiquidity is dangerous during financial crisis. It traps you in the investment. It means that you can't move money around. And the article says these are hard to sell quickly, such as social housing, wind farms and nuclear, which the government says will help their levelling up ambitions. There you go again, the levelling up. So what's happening here is the government is trying to raid those pension pots, clearly. If they want to put it into things like social housing and nuclear energy, the government should be funding those things. However, they want you to fund it. They want to take your money out of the pension pot. They're going to strong arm the pension funds and they're going to make them pay for these projects rather than the government pay. And they're going to be illiquid. So this isn't for your benefit. This is for the government's benefit. This is really dangerous stuff that I'm reading here. Now, within the document itself, I found probably the most terrifying proposition of all of them. I went through the whole document. I'm not going to read it out. You can go through it yourself. Many of the things in there are very vague, but there was one area that really stood out to me. And this is regarding what they're going to do to your pensions if you are part of a local government pension scheme. And it's all the way down here. And what it says is that in 2023, early 2023, they're going to consult on new guidance in terms of the local government pension scheme in England and Wales on asset pooling. So what's asset pooling? Well, that's essentially where they take all of the assets, but not the liabilities, all of the assets of the pension funds and just put them all together. Okay? So they'll be putting together the assets of the pension funds. Now, whether that's a good thing or a bad thing, it depends on who you're asking. It depends on what those assets are. But the most important thing is what comes next. It says the government will also consult on requiring local government pension scheme funds to ensure they are considering investment opportunities in liquid assets such as venture and growth capital as part of a diversified investment strategy. So let me just explain what that means. They're going to take the local government pension scheme, which is the largest pension pot in the UK, right? It covers the most people in the UK. It covers all the public sector workers. They're going to take that and they're going to force them to consider investing, let me just repeat this word for word, in illiquid assets such as venture and growth capital. Now, just to explain for those that are not aware, although I'm sure most of you are, pension pots are meant to be the most secure of all investments, right? So they take the pension pot, they're meant to invest it in secure investments that are liquid and that can also have a good degree of safety. So they need to invest in things that are not going to potentially go to zero. That's why they often put a lot of government bonds in there, or they used to, because a government bond has a guaranteed interest rate on it. You buy the government bond, it's considered one of the most safe and secure investments because it's very unlikely, for certain governments at least, to default on their obligations. The risk is extremely low and they give a guaranteed return. So historically, it used to be a much better return than we've had over the past decade. That's one of the reasons why we're having so many problems, because the interest rates on these bonds that pension funds depend on for an income to pay out their pension holders has been very, very low. It was forced extremely low. So this forced, on the other hand, for pension funds to start taking on more risk. Now, that's the last thing you want in a pension fund, because the pension fund is what people are depending on to survive in old age. So you want to keep them as low risk as possible. And like I said, this was always government bonds because they've got an interest rate attached to them. And that means you can guarantee that there's going to be a return on that. They're not going to go to zero unless the whole government collapses. But what they're suggesting here is that pension funds are actually going to be forced into considering, and what does that even mean? They're going to be forced into considering illiquid assets such as venture and growth capital. Now, venture and growth capital are as risky as it gets. Like literally, that is the most risky portion on the risk curve. And let me just show you here. This is the risk curve here. So you've got cash at the very bottom. Cash is the lowest risk. Then you've got short-term bonds, long-term bonds, real estate, convertibles, large cap equities, junk bonds, small cap equities, and right at the very top, you've got venture debt and venture capital. This is absolutely astonishing. I couldn't believe it when I read it, and I still can't believe it now, that they're going to actually raid the pension funds of the UK public sector workers, and they're going to give that money to the riskiest part of finance, which is venture capital. They're going to take that money and hand it over to them to squander. That's what's going to happen during a global recession, if not depression, in the country that is going to have the lowest growth of all of the G20. That means that venture capital is the worst place to be. Venture capital is the place to be during a massive expansion when there's lots of money. So what's going to happen is, because there's not going to be lots of money, because those venture capital firms are not going to be able to access credit, the government has decided to steal that money from the pensions. You know, venture capital are startups that have no profitability. By default, they're going to be swimming in debt. They literally just have ideas at that stage, and they're looking for investors to come in to give them money to actually try their idea out. That's essentially all it is. Now, normally they would have to go to big hedge funds, big backers, big financiers. But what the government's doing is saying, no, we'll take it from the pensions. The pensions can shoulder the risk. Just think about what that means. This, to me, has kleptocracy written all over it. I'm very rarely left speechless on this channel, but reading that one, it actually left me speechless. So all I can say is, if you see this as I'm seeing this, that they are taking those pension pots that are already suffering from having the supposedly low risk assets in them. They're already losing money. They've lost maybe 20% in a single year because the stock market's down and because bonds are not performing. Because remember, the yield on the bonds in these pension funds are extremely low. And they're going to take those pensions, despite this year almost having a collapse in certain pension funds and having to bail them out to the tune of billions. They're going to take those funds and push them not further down the risk curve, but further up, all the way to the top of the risk curve into the most risky class. And they're going to make it so that the funds have to consider them. Now, that says to me like they're going to force them into taking on this venture capital and venture debt. That's what they're going to do. They're going to force them into it because they don't want to do it. So they're going to raid essentially the pension pots to fund whatever agenda or scheme they want. And like I said, they're planning to do this in other areas too. They're planning to do this in terms of social housing. Social housing. You know why there's no social housing? Because they've imported lots of migrants and they've filled up the social housing with migrants. And now they're going to take the taxpayers' money and force them to invest in that housing. That's what they're going to do. Also, they're going to force them to invest in green technologies by taking their pension money and forcing them to invest in things like wind farms when the government has destroyed its own energy through their policies. And again, they're going to take that from the public. This stinks. This absolutely stinks. But the icing on the cake here has to be telling pension funds that you're going to have to start to consider venture capital. Nobody who understands investing, who is responsible with money, would ever do this with the pension funds, least not after the LDI crisis, and especially not at this point in history when we're going into a massive global slowdown, potentially a Great Depression, and almost certainly we're going to see the Ponzi scheme start to unravel in the coming year, 2 years. So to me, like I said, this is one of the most corrupt things I have seen come out of Great Britain, and that's saying something. That's really saying something. All I can say to you is, if you have your money in a UK pension fund, if you expect to retire on that pension pot, I personally don't think it's going to happen. I don't think you're going to have anything left in there. I think the only way that you can ensure your pension survives is to take back control over it. And you can do this with a self-invested pension plan. There you have the freedom to invest in whatever you want. If you had a fund manager who was worth his weight in salt, if he knew his financial history, he would be suggesting that you put it in commodity producers because they do the best in a high inflationary environment because the things they produce go up with inflation. He certainly would not be suggesting that you put it into the riskiest part of finance, venture capital. Also, he would know that post-1929, the one sector that carried on doing very well in the coming decades was the gold miners. He would know that, and he would advise you to start thinking about putting your money into that. So personally, if this was me, I would get out now because the door's about to close on you. Now, this isn't financial advice. I'm not telling you what to do. I'm just saying what I personally would do if I was in that situation. Even if my pension portfolio was down this year 20%, I'd be taking it out of there because I'd know that in all likelihood, by the time this is done with, it's going to be down 95%. A lot of the stuff in there is going to go to zero. And what's left is going to be worthless because the currency will be hyperinflated. Just think about it for a second. Most pension funds this year have lost 20%, but prices have gone up 30% across the board. So that means your pension value has gone down 50%. It's lost 20% in terms of its value, but it's also lost 30% in terms of its purchasing power. That means if you transferred that fund over to cash, it will buy you 30% less than it did last year. So take away the 20% it lost in terms of its actual value, take away the 30% it's lost in its purchasing power, you've lost 50% in a year. Now 50% of a pension fund is something that somebody works for 30 years. Most people work for 60 years to pay into a pension, or let's say 50 years. That's 25 years of somebody's life, somebody's hard work that has been taken from them in a single year. But make no mistake, this is just the start of it. This is going to go on, and they are planning to take what's left of that money and to flitter it away at the casino on your behalf. So all I can say is you really need to get up to speed on these things. Of course, if you're interested in learning more about these topics, please sign up to my Patreon. So I hope you found this video useful, everyone. If you did, please share it with somebody else because it may be the thing that helps protect them from what is about to happen to them and their wealth, or their supposed wealth, their paper wealth. Now is the time to be getting out of paper wealth altogether, because some of these things that are coming are going to happen very fast. They're going to destroy wealth. And in my opinion, I believe they are setting up to ensure that everyone is trapped in the coming collapse so that they can control people in its aftermath. They can lock you in to a CBDC, digital ID system, and to do that they need to ensure that you have nothing left on the other side of it. And that is what I personally am trying to escape. I'm helping others do it over my Patreon. Like I said, if you enjoyed this show, please share it. Thank you for watching, and of course I will see you in the next one.